Okay, recording this video after close of trade Wednesday, 14th of December 2011. It's the first new video put up on the site for about 10 days now. We've been traveling in the south of France and California now. And thank you to everybody for kind of giving us a little bit of a break. It's been a good kind of 10 days off, although not without its ups and downs. And we've got a little bit of a story to tell. I'll hold that back to the weekend. In the meantime, just run through some charts, see what I'm kind of looking at the moment. The first one is a weekly chart of the Emini, just showing the better sine wave indicator, showing the swings that are happening. And I think for me the most important thing is this downswing is starting to play out now, and this kind of pullback to end of trend sequence. After the sell-off, we came back to the pullback level above kind of 1250s, and we had an initial sell-off, and now we've had a double top kind of made underneath this resistance level here, and so now we're kind of playing out properly to go down and meet that cyclical support area, which will be an end of trend signal somewhere kind of down here. So that's kind of the bigger picture in terms of explaining the weakness in the market. And if you go to the volume chart, better volume, just showing that last week's activity up at this kind of 1250 area, you can see that bar there was a high volume churn bar, which means it's relatively high volume but small range, and so that was a lot of selling coming in and not allowing prices to get much above that kind of resistance level there. So that was kind of an important point. So we've come back to test back up to that pullback resistance level, high volume churn kind of heading back down. But on the lower time frames, let me just show you on the daily time frames. So we've come back up. So the last 2 weeks activity has been this bounce up from cyclical support into cyclical resistance, and we're coming back down. And at some point over the next few days, we're going to find some resistance here, a support level, when we're kind of heading down, maybe below 1200. So that's what I'm going to be looking like for in the next couple of days. But for me, what I'm curious to see how this plays out is going back to the 45-minute chart and to see what the pattern looks like here. Now, the importance of using the 45-minute chart is that's the lowest time frame compared to a daily chart. So you kind of go back a factor of 3 and then 3. So the daily chart goes to the 135-minute chart. Divide that by 3 gets you down to the 45-minute chart. So cyclical moves in the daily time frame are equivalent to trend moves in the 45-minute chart. And you can see here that better sine wave beautifully signaled pullback to end of trend sequence, the kind of the bottom activity that we had down here in the 1100s, when we bounced from there, pullback to end of trend again up at these 1250, 1260 levels here, signaled a high of that move beautifully. Now, what we've seen over the last couple of days has been this batting backwards and forwards between cyclical highs and lows. And for me, that looks like a complex correction, but we're sitting right here at this 1200 level. So in my mind, the question is, are we going to break support tomorrow, Thursday, and fall through this into a pullback to end of trend sequence, which will finish off down here, that will then likely match up with a cyclical support area on the daily time frame? Or is this a complex correction where we find support at 1200? And that actually means, because that's a complex correction down here, that means that we'll likely have a fairly strong trending move on the way up. And if I look kind of down at the 40,500 tip bar chart, we've seen quite a lot of damage in terms of selling down. So this 1200 level could well hold on Thursday. So Thursday's going to be an important day, whether that kind of gets broken hard into a pullback to end of trend sequence, or actually it holds at around 1200, and that kind of builds the case then for getting a little bit of a bounce and a little bit of a Christmas rally. So that's kind of interesting going forward. In terms of average trade size, I mean, this has kind of played out really quite nicely over this last sequence. We had the professionals come in here. Now, the algorithm I'm using here is just the average trade size on the 135-minute chart. So there's 3 of these bars per day. The coloring I use is the same as better sine wave, so blue bars shows professional activity and yellow bars shows amateur activity, but it's not better pro-am here. This is just directly calculating the average trade size. And you can see the professionals kind of came down here at the 1150 levels, kind of picked it up, and then we had this rally from here. But as we went into those highs around 1250, you can see all these up bars were all blue professional bars, the professionals taking profits all the way up through that move. As it slowed and gradually rolled over, the professionals on the way up were taking profits. That was their last hurrah, just here, kind of getting in on that high up moving bar, and then the market's kind of sold off. Now, again, we're sitting down at this kind of 1200 level, but no professional activity like this, kind of holding us at these levels. So, have we actually seen the professional? We've seen the professionals taking profits up at the 1250s, but if they step back into the market at 1200 to hold, this chart would suggest no, they haven't. So, maybe 1200 won't hold. In terms of oscillators, better trend is looking pretty good. I'm just going to show you this because we had a nice sequence. This kind of cluster of buying signals took profits here and reversed and went short a couple of almost 10 days ago here. I'm just going to show you the strategy performance report here. So this is the equity curve, and you can see the signals, the systems are just kind of about to break into new equity highs. So I'm really happy. We've had this kind of fall off in the equity curve, and we've just been building a base here. We're kind of going to be breaking out to new equity highs. These systems were released, I think we had about 400 trades when it was released, and so they've continued to make new equity highs, and I'm quite proud of the fact they look like they're going to make kind of new equity highs in the next couple of weeks. That's kind of good. But so we've been signaled short on the trend systems here, and we're down here at negative 167 on the trend oscillator, so kind of oversold at this level. And here's our friend, the bullish divergence pattern, kind of come in here with an oversold condition here, which suggests that the trend oscillator might start to turn maybe tomorrow. And when it does that, it'll take profits on this short trade and reverse and go long. So again, this is kind of fairly bullish. Just to point out, these kind of bullish and bearish divergence signals, they kind of come before these turning points in the trend oscillator. So there's a bearish divergence signal before the oscillator kind of rolls over and we kind of go short here. Here's another one kind of before the oscillator kind of peaks and rolls over, and that caused us to take profits on these kind of long trades here and kind of reverse and go short. So these divergence patterns signal prior to the oscillator turning. So again, tomorrow is quite important at 1200. We could find a little bit of a bounce tomorrow. Better trend line. We're in congestion at the moment, and this rising trend line here will give us some form of support somewhere between 1185, 1190 maybe, and 1200. So let's see kind of what happens over the next couple of days, and that might kind of come into play with the better sine wave on the daily chart also kind of holding us at that point there. And then on better X trend, this is just showing a trailing stop, volume-based kind of trailing stop, to give a good indication of kind of the trend. You can see, trails that stop down to keep us all in this. Despite these kind of rallies back, this signals here that the market is weak and we're continuing in a downtrend here. Break into an uptrend, we then have a downtrend here, and what we had in this sequence was actually an uptrend kind of develop here, and we're back into this acquisition zone where the professionals kind of stepped in to buy with these exhaustion buying signals here at this point down here at this kind of 1200 level. So are they going to come back in at this level and kind of take the market higher? So that's what I'm looking at. In terms of other charts, then interest rates, we've got this kind of swing down about to take place on the weekly charts, and the best chart to show you on this is the 5-year note. The 10-year and the 30-year are fairly similar, but what we've kind of broken into a downtrend on rates. This is using a weekly chart of the actual interest rate rather than the bond contracts itself. So we've broken into this downtrend here. We've held down here at this kind of 85 basis point type level, and we're coming into cyclical resistance at this point, which means that the energy over the last few weeks here has been kind of rising, has been holding us in this pattern. We've gone kind of nowhere because the safety players is rushing into the bond contracts, and so the interest rates are depressed. But over that time period, the interest rates had some positive bias because of that kind of move in better sine wave. The energy is now going to start flowing down once we get that cross, and this will be a pullback to an end of trend sequence on the interest rates on the 5-year note. And so all of a sudden, interest rates going down means bond prices prices going up. So it's kind of, rushing into the safety of bonds here. So, and then when you look at the dollar index, I mean, I've been going on and on about the dollar index, and it's just playing out nicely. We had all of this bottoming activity up, kind of 70, 75 type area here, and then we kind of rallied forth. And now we're breaking out into this new uptrend. I talked about this, I think, in the last video that I did. We came into initially a Rambo pattern, a couple of amateur up bars here into a Rambo pattern, just showing the amateurs kind of getting a little bit ahead of themselves here, showed some weakness at that point, so the market comes back. And here this kind of breakout, so resistance becomes support as we're breaking into an uptrend here. And you can see these little bars here, these amateur down bars, here and here are just testing down bars. They don't go anywhere. It's the amateurs kind of trying to get short at that point. The market rallies as soon as the high is taken out. It just shows that the strength in the market. And the last time that we saw kind of professional bars here, they were kind of buying this kind of spike down. They bought this kind of rally out, and that the lows of those blue professional bars never got broken. We had again kind of testing amateur down bars into those lows, and then the market, and we had another one here, beautiful amateur down testing bar. The amateurs trying to get short at this point, and no, it's like you should be fading the amateurs as soon as the highs of those bars are taken out. It gives us confidence that the market's kind of moving on. And in these up moves, we've not seen professional profit taking yet here. So the dollar index is still strong, which means bonds is going to be strong and gold is going to be weak. And here's the euro chart. It's kind of mirror image effectively of the dollar index, and we've just broken into this downtrend here, kind of being led by the amateurs a little bit. So we've got Rambo patterns kind of down here. So that suggests to me that this might kind of hold a little bit initially until we kind of come back up again. So that's it's not kind of perfect there in terms of that Rambo pattern there. But we do have weakness in euro and kind of strength in dollar index. And here's the gold contract. And just if you go back to the videos talking about the reason why gold goes up where there's kind of political uncertainty. But as soon as actually the financial crisis hits, people run into the bonds and the dollar index, and gold goes down. So it's like the rally that we had in gold was preceding was kind of as a result of the political uncertainties and so on. Around the world, everywhere that we've seen kind of political uncertainty and money printing and kind of the money rushes into gold. And now what we're doing is, the market's kind of playing out in terms of the safety play, and the risk market's kind of coming off, and gold is coming off. It's interesting. Today's trade, we had big down bar into the 1577 type area, and this is blue professional bars here at the same level that we had blue professional bars kind of coming in here last time. So at this point, there was certainly professionals were kind of getting on board a collapse in this market. We didn't rally very much further past at this level here, past the highs of this blue professional bar, this kind of sequence where the professionals were getting short at that point, and it was rallying amateur up bars into that kind of area up at 1800. So with this bar here going through 1600, is this kind of falling through the ice and getting this move going, continuing on, or is it trying to form a bottom? I'd suggest because the dollar index is still going up and bonds are going up, that this might be kind of falling through the ice. So interesting kind of times. Last chart, crude oil. Crude oil tried to make a bottom here. You can see we had blue professional bars into these lows, not unlike this kind of sequence on gold. And from there, with exhaustion selling bullish flush signals here, these lows with cyclical support, everything kind of rallied on. But at $100 up here, we had amateur up bars, this whole sequence here. I'm going to turn on better Pro-Am. All of that's a whole family of little no demand patterns just sitting right there. And then we had this kind of Straits of Hormuz story that and oil prices kind of spike above 100. Blue professional up bar, classic. The professionals kind of taking profits as it comes back up to $100, and then the market kind of corrects on the Wednesday, kind of heading down. I mean, it's just little news stories like that. Someone starts a little bit of rumor, the professionals take advantage of it, kind of use that activity, kind of get out. And we know they're selling out because the lows of the bar got taken out here with this strong move down on the Wednesday. So I think that's all. Okay, lastly, the tick bar charts. I'm out of practice on this anyway. So 40,500 tip bar chart just shows us this is very, very similar. This time frame is very similar to a 45-minute chart of using the at es.d contract, which is just the day session data. This is tick bar data using day and night session. So 40,500 tip bar chart, and it shows this kind of pullback to end of trend sequence here, marking the top in the market. We'd had our exhaustion buying, less and less buying, bearish divergence signals here. Last kind of couple of hurrahs here with these bearish divergence signals, blue professional bars on those highs, cyclical resistance, bang, we kind of cracked. So we've had exhaustion selling up on the 40,500 tip bar chart at this point here, and quite a lot of selling, into the latter part of Wednesday. Maybe that's enough to kind of hold it at this point, or we have sunk below support on the 40,500 tip bar chart, but when I go down to the 13,000, we've had pullback to end of trend, and then second cyclical turn after end of trend here, with Rambo patterns at the bottom, and all this amateur activity down here after blue professional bars kind of coming in here, exhaustion, selling, bullish divergence, and that could be enough kind of flushing out volume at this point here to hold it at 1200 and maybe have a little bit of a rally on Thursday. And then just to show you the 4,500 tip bar chart here, which is the time frame for kind of trend direction on a daily chart. Just been awesome little signals here with these kind of pullback to end of trend sequences, showing the end of this trending up sequence, pullback to end of trend, bottom of this sequence here, and then pullback to end of trend at the top of this little sequence here, and then today's activity, pullback to end of trend, and this kind of slow grinding down, bottoming activity at 12:05 today. And you can see on this time frame we've got exhaustion, flush, a final little exhaustion thing. So could quite see us having a little bit of a rally on Thursday. So anyway, there we go. Just run through the charts I'm looking at the moment, and hope your trading has been going well over the last week or so. And I'll be getting back into my trading over the next few days.